Hi, Thomas. Hey, Jan. How are you guys doing today? All right, we should get started. I think this will be recording, and it should be back on my channel when we are done. So I'm going to do this as a live feature. I'm testing this out. It's the first time I'm doing it. This will be pretty similar to what I do in my regular stream when I'm looking at individual options that I did and also possible trades for next week. I did initially have my camera there in the bottom corner, but I don't see that there now. It'll be okay. You could assume it's me, right? Okay, so first let me go over the colors. Black was a closed trade. That means it's no longer there. Purple's an open trade. It might have happened in the past or more than a week apart. And then it changed to orange because it's a little better to see it. And orange was this week's trades that I made, okay? And here we are. All right, so started on Riot. This was on 3/19, and it was a weekly expiration. Stock price was at 61 and change. The strike was at 45, which I thought was a big downside protection there for a $50 premium. The delta was 0.06, which I think is a lie at this point. Riot on Thursday actually went in the money down to 43. I decided to just hold on to it. Shot a little bit back up on Friday to around 47. So I just let it close. $50 profit off $4,500 in cash secured put. So a little bit over 1%. That one I was getting ready to do a covered call on, and hopefully, and luckily it didn't go below 40s or whatnot, because then that would have been a bit tough. KNDI, pretty straightforward one. I initially did just 3 cash secured puts, strike price of 5. Does pay pretty well, $69, but then I wanted to tie up more money. It's only $1,500 in the end. I just bought to close it for a $6 profit. No big deal. GTE, this is a penny stock that I decided to do a cash secured put last month on, and now I decided to just do covered calls. The stock price was at 82 cents. I sold the cash secured put at 1 when it was actually below 1. It was around 90 cents, and it went down a little bit, but the cash secured premium essentially covered pretty much all of that. Strike price was at 1 for the covered call part. I didn't say the number, but I think I have about 10 of them, and the premium $75. If it ends up going to 1, it'll be a pretty good gain. And if it doesn't get to 1, I'm just going to do this month after month, hopefully get premiums of 5 to 10 cents per contract. CVM had really high premiums, and I did pretty far out of the money here. For a monthly expiration, stock was at 18.12, and I sold the strike at 7.5 for a $180 premium out of 8 positions. So really high premium for a large downside protection. But then I got a little spooked on how pharmaceutical companies could drop on a dime. If you look at FREQ, I was considering this, and luckily I didn't because, oh, this looks fine. Go to the monthly, it was at $36. Bad pharma news, dropped like 2 falling knives, and that would have been a really bad decision. So when I saw this happen for FREQ, I just decided, let me get out of this. I tried to get out of it a little slower at first, so I did buy the close around $15 to $20 for a few of the 8 positions I had, and then I just decided to get rid of all of them. But it was a pretty good trade, $480 premium, bought to close at 401, so $79 premium, holding about $6,000 in about literally 2 days. So I'll take it in the end, but I'm going to be very wary of pharmaceutical companies in general because it's hard to know what they're going to do. SOS, this is another one just like Riot, mining Bitcoins, 7.26 for a weekly, strike price of 6, paid $56 for 6 positions, so good return in the premiums. That hovered below 6, it touched 5.9, 5.8 at one point, but then went back up to 6. That was another one like Riot I was considering going covered call on, but it expired worthless, so $56 in a week out of $3,600. So pretty good return. I'm considering SOS again for next week. MVIS, this one's been dropping a lot. I did get out a little bit early on it. It was a monthly expiration, 1737. Sold the $12 strike, relatively close. Premium was very juicy, 255. I essentially just bought to close with a guaranteed profit of $75 there. In hindsight, that's good news because I think it's already hovering around 14 or so. Yeah, 1345. So I wouldn't have been able to get out at that same premium, most likely because of 416. Blink's another one that I got rid of pretty quickly. 39.82. Strike at 32. Did two of them, so 44 per or $88 for two contracts. And bought to close at 52. So pretty quick gain, $36 out of 6,400. It's about 0.5% a gain. Decided to take it, and I think it was 2 days or 1 day. Considering writing down the date I buy to close so I could look back and to see what it actually was at the time. Palantir I've had for a while, and the stock's been dropping a lot, so I've been essentially rolling down my covered calls. 23.35, had a pretty high strike price, 29 for $56. I currently still have this, and I think I could buy to close it around 30 or so I'm considering it. Another CYM I did really close to at the money, got spooked, so I got 214, got rid of 205, $9. CCIV is one of them that I currently have. It was a weekly, and I decided to go at the money and the premium. So stock price was 26 and change. I actually sold a cash put at 26, two of them. $224 for 3 days. That's why at the money with high IV stocks could give you really large premiums. The stock's been tumbling quite a bit. So now it's down to 23, and that was after a bit up on Friday. Essentially, I sold the cash put right here. Not great timing on that, at least currently. So what I decided to do was I placed a rollout order to see if it would hit, essentially a limit order where I would buy to close it and then sell to open a new contract. I decided 2 weeks out, and I put it at a fairly high premium to see if it would hit or not. If it didn't, I was willing to covered call it for next week, but it actually did hit. So again, $224 premium. I bought to close at 660. That's a big negative, but I wrote it as a separate position the new cash put, which I'm currently in. So I'm in for April 9th. That's 2 weeks out. I kept the same strike price at 26. Remember, it's 23 and change, so it's a bit higher than the current price. And I did get an $800 premium. So if you look at the numbers on this, it's 224 minus the 660. That's why I was down for. Bad math, 436. I guess when I write my negatives, I don't like to see that negative that big. But plus 800. So if CCIV gets to 26 in the next 2 weeks, I'll be able to make $364 in premium. It was two positions. So 2,600 times 2 is divided by 5,200. Still be a 7% return in 3 weeks, which is still fine. I'm going to keep an eye on it. I might actually want to get assigned by it and then sell covered calls. But the rollout happened to hit with a fairly beneficial credit. And if it didn't hit, I was just going to let it go anyway. Rocket Mortgage is one of them I'm going to focus on for this week as well. Quick expiration, 23.88. It has the weird strike price of 22.39. Quick $23 premium. If you do 23 divided by the 22.39, you get a little over 1%, 22.39. You don't have to do 22.39 times 100 because you already have the decimal point, by the way. So that's a quick way to figure out your percent. Just divide the premium by the strike price. It's a little over 1%. That one was in the money slightly and then bounced back up pretty high. Quick $23. So that is one I'm most likely going to do, and I'll show you my limit order coming up. GNUS is one I'm going to heavily focus on. This could be a great position. Weekly, it was actually 323, so I started it on Tuesday. For 4 days, strike price was 2.5. Sold 11 of them, but made $102 premium. So 2.5 times 11. I put up 27.50. But 102 divided by 27.50 was 3.7% in not even a week. So very good return there. It was hovering near 2.5 for a while. I wasn't going to buy to close it. I was waiting to get assigned if I was, and sell covered calls the next week. This is one we'll look at pretty big detail coming up. If this stock hovers near, I would say between 2 to 3, with the premiums the way they are, you could do really well on it. You have to be willing to get assigned though, because there's a good chance that that might happen, especially because the current price is 2.5 and change, 2.54. So be willing to get assigned. Okay. I did a buy right, essentially sell a covered call on NEO. Did one for 401, so I went out a little bit later, week and a half or so. My total cost basis was $37.35. That was for the 100 shares. Oops. And then I initially sold a covered call at 40. So I wanted to get some upside if the stock went up. Got $113 in premium for 2 weeks. The way to figure out this premium, you'll just do the 113 divided by the price I bought them at, $37.35. 3% in 2 weeks, definitely within my range. The stock did drop a little bit at that point. Thursday I was down pretty far. Went down to the 35s and change, even 34. We got a little uptick here. So when I decided to go down here, I decided to buy to close. I did make a profit on my actual covered call. So $70 profit here. But then I made a new position. Same expiration, 401. I decided to go pretty much in the money, minus $35 if it happens to hit. And it was a $108 premium for a week. So if I happen to get assigned at 37 by the end of the week, again, it may not happen. Possibly it's 36, so pretty close, closer than CCIV was. 108 plus the net 70, we're looking at $178 in premium in about a week and a half, because it was 324 divided by the 37.35. Still looking at 4.7%. I do have to subtract $35 from that, because I'm going to be selling 35 times 100, 35 cents times 100. So 70 plus the 108. Let me subtract 35 if I get assigned. We're at $143 out of $37.35 I had to put up. Still a 3.8% return in 2 weeks. So NEO does have pretty high premiums, trying to take advantage of this downturn in the actual stock price. Good way to do that is to sell covered calls lower and lower. Ideally, you don't sell the covered call lower than your strike price, but I am technically selling below my cost basis if you consider the net credit I got on the previous covered call. And 35 cents, not a huge deal. So those are all the trades I made last week. It looks like I'm down a lot based on my accounting methods, which is a little weird. What I've been doing for accounting is take my premium, subtract any buy to closes, and that's my net profit. I've only been tracking my profit and losses off closed positions. So it's a little deceptive there. I'm down 436 in CCIV. The current one at 800, obviously, not obviously, but I could actually buy to close it already at 725 about. So that'd be about a $75 gain. However, I didn't do that yet, so I'm not going to count it. Based on that, though, if we look at the amount of income I earned this week, even with the negative 436, I still have a $70 gain in the week. So I don't mind that. CCIV was one of the largest holdings I did. It was $5,000 held up on it, and I still show a slight gain even with the rolling. Okay. If any of you guys on the stream have any questions or thoughts on it, I'm checking right now on what I'm doing. If you have any thoughts on how I'm doing the profit and loss. Definitely like to know. I see about 7 of you guys online, so definitely appreciate everyone joining in. If anyone has any questions on what I currently did, or at least what I did last week, let me know in the chat. Definitely appreciate the community here. I'll be checking the chat if you have any questions. I'm going to go over how to do my screeners for TOS, that's Thinkorswim. So for Thinkorswim, I'm going to show the parameters that I've been using to look up either monthly or weekly expirations. I do see a little delay here. I'm just going to keep talking and see if it catches up to myself. So this is similar to Ryan from the Option Wheel Facebook group, which I'm a moderator of. He showed me a lot of these parameters. I pretty much kept these about the same. I did do one change. This is looking for options to sell, not buy. So I want my deltas to be negative. Here I have a negative 0.3 minimum to negative 0.10 as the max. So essentially 30 to 10% range. I don't want to make my max at 0 because then you might see a lot of positions that are not necessarily that good because they may not pay much. Days to expiration, this is my weekly one. We went from 3 to 7. The reason why I did 3 to 7 is if I check earlier in the week or middle of the week even, like if I check Tuesday, the min of 3 will help actually notice that. The max of 7, I could actually change a little bit more to possibly see ones for the next week. Like if I make that 10, for instance, I could look on Wednesday to the next Friday, which could be helpful at times. Bid, I want at least $10 for the bid. If you do 0.05, you might see a lot of them that are a little hard to trade, or you might have to do a lot of positions on it. And then the max of 50, you can make the max higher, but I was working with relatively lower positions in the strike prices. Return on risk, I want at least 1% per week. So that's why I put return on risk tab at 1%. I put the max at 3 because I don't want to look at some that are 20% for the week. Those are probably going to be too risky. Open interest in the weekend's a little deceptive, but I wanted a little bit of open interest, at least 100. If you make this 0, you're going to see a lot of positions that are not even optionable, or you might not get close to the bid-ask price. And then stock, I did the max of 50. That's mostly for my funds that I'm using. You can make the max higher or lower depending on how much you have available. And on Thinkorswim, the way to actually set this up, I'll probably do a lot more detail on this in a future video. Click on scan, and then you want to go to optionable. They do have all stocks, all funds. You want to go to all optionable in the scan. And then over here, there's little 3 dots you see. You want to add a filter, the plus sign actually. And usually you want to add an option filter, although you could do stock filters too. Like I did the stock price of 50. There's a lot of other things you can look at here, but just the basics I think works fine. Implied volatilities, one that I've tried before. But with the parameters that I looked at, you're going to have relatively high implied volatilities anyway. Let's add that one in and see what happens. I need to actually put numbers there. Let's do a min of 30, max of say 150. We're at 89 so far. Let's see if it changes. We got down to 83. From what I'm aware, I don't see implied volatility as one of the columns, but it's obviously there. I could look it up here. I just didn't put it on my initial bottom part. Add item. Here we have implied volatilities. It's going to be a little different because it's the weekend. If you check in the middle of the day, you should see certain percentages. All right, so now on the bottom, what are we looking at? These are symbols you don't have to worry about. The description is what you're trying to possibly do more research on. So for instance, if I was interested in Blink, it says 100 weeklies, April 1, 21. So April 1st, that'll be Thursday. Remember that it's not going until the 2nd. Market's closed on the 2nd. 21 means the year. 30 is the strike price. And then we're looking at puts. These are all puts because I put negative deltas, okay? So if it says the last option selling price, you usually want to go to a separate tab and look up what the stock is at. So Blink's at 35.83, and we're looking at selling a Blink 30 put. The ROR is the return on risk. I'm seeing different percents here based on either the bid, the ask. I think it's the last, but if anyone can help me with that, definitely let me know. In this case, you're going to get 1.13% return on your risk. Just looking at the numbers, it's probably the 32 divided by 30. See, it's 1.06. It's a little different. 33 makes it 1.1. See, I'm not sure exactly what number they're using for return on risk, but if you go with just the bid price was 0.32, so $32 over 3,000. You just have to put the 30 in. You get 1.06, a little over 1%. And that's the minimum I want to use when I'm looking at individual trades. What I'll do at this point is go to either option profits calculator or m.stockoptionchannel.com. Let's look up Blink. I didn't even have this prepared. I'm just literally doing this live with you guys. Sometimes it does that. Just refresh it. It's not liking me today. There we go. All right, so let's go April 1st. Cash secured puts for income. Let me see if I could real quickly. I was wondering if I could leave the link on the chat, but there's probably a way to do it. StockOptionsChannel.com. That works. 35.83. So we get the 30. This tells us the percent at bid. So the yield at bid. Looking at 1.07%. It's 0.32 divided by 30. This number says the downside protection. We have 16% downside protection in a week. Remember, this is a pretty high implied volatility position. So not necessarily safe, but at least the return is decent for the week. There's a lot of, this column's the, I think, volume. Yep. The volume's pretty high. The open interest is pretty high. It's actually the most popular number. There's a lot of option wheelers or cash secured putters out there that like this particular position. And 85 is the approximate delta. Current put expires worthless, so you do 100 minus that. 0.15 would be the delta. And again, 85% chance it doesn't go below 30, and you get a 1% gain. That is a possible position that I might look at. I already put some that I have waiting, but this might be one to definitely consider. Okay. So again, looking at the options here, ticket symbol, and then April 1st, this last number tells us the strike price. Okay. If anyone's interested in getting this particular spreadsheet, let me know in the comments, or later I could easily send that to you. The way to do that, if you have Thinkorswim, show actions menu, export. You could export to Excel or to a file. I'll export it to a file. I've already done this for a few of them. And then what I could do, this is a little bit of admin-y stuff, but it's helpful to see because I'll probably send this to the option wheel group. If you go to Google Drive and then open up a Google Sheets, you could actually upload this data into Sheets, which makes it very easy to share to other people. So do File, Import. Thinking. Find your upload. I did a few of these earlier, but here's the latest. Import data. And you get it all in Excel. Oh, Google Sheets, not Excel. But what's good about this is if someone has a Google email, which most people do, it shows what you're possibly thinking of. Then you can just go File, Share. Testing. Weekly. 328. Get link. Could be anywhere on the internet. Copy link. And then I could copy that to anybody. And as long as they have a Gmail address, you can see all that data. Okay. So again, anyone that's watching, or if you're going to watch in the future, if you would like spreadsheets like this where I could show you it, let me know and I could definitely send it your way. By the way, Thinkorswim, you could get a free version with a paper trading account. I think you get 30 or 60 days. I forgot the exact number. And this one I actually opened a brokerage. I just put the minimum, I think it was $50. I just have it sitting there in the brokerage. I didn't do any trades with it yet. But the main reason why I want to do it, so I don't have to keep doing the paper trading every 30 or 60 days with new emails. I can just keep the thing going here forever. And eventually I can take out the 50 if I want. This is something that I probably will invest in the future, but that's time for another show. All right. Trades that I want to think about for next week. I already put these in as open orders. We have Express 401 at 4. Earnings date already happened. Express is at 424. Not a huge amount of downside protection there. You're only looking at a quarter, but pays $20 per position. So that'd be, I think, a good one in terms of the return. 20 divided by 4, looking at 5% in a week. Willing to cover call it as well. Only 4 contracts, not a huge position. Fubo has been dropping like 5 falling knives. So I'm thinking it's probably not going to continue dropping like 10 falling knives. It's currently at 21.88. The last month has been pretty rough with it. It was actually at 41 down to 21. So cut in half in a month. I actually almost did a position around here. That would have been a tough one to get back on. But now it's down to 21.88. I'm thinking, I think the lowest one that had possible was a 15. So we're still looking $6 down. 21.88 minus 15. We still have $6.88 in the money. Sorry, out of the money. Divide that by the current price of 21. Was it 88? So it's a drop 30% in a week for me to possibly need to sell covered calls on it. So I think it might be worth the risk. I left this as an open order. 13 cents out of 15. A little under 1%. 0.86%. It's 4 days, not a week, so it's close to 1% a week. I'm not going to be super picky on that. It's what I might do. There are higher strike prices that pay more, but looking at the stock's a little nerve-wracking, so that's why I'm going to probably go lower than this into the least amount that I can. I forgot what the delta was on it. 21.88 to 15. I don't buy that for a second. It's not a delta of 0.01, even though they're saying it is. There's definitely more than 1% risk to get 1% a month, or sorry, a week. But we'll go with it, I guess. Another one I'm thinking of, GNUS. I mentioned that quite a bit before. The stock's at 254. 254. You sell the 2.5, essentially selling an at the money cash secured put for 4 days. It's almost 50-50 it's going to get there, but 10.8% in a week. Whew. You could consider the 2 if you want to be safer about it, and that's still a good return to 3% a week with a delta of 0.1. So $6, let's say you get 6. You might even get 5. 6 over 2, you're still 3%. You get 5. 2.5% in a week. Do you want to make like 50 positions of it to get enough profit? You got to consider the transaction costs on that. You're going to pay 65 cents probably. So you are going to lose a little bit on that. Let's say you get the minimum 5. But then you have to subtract, so let's say 65 cents. 435 over 2. Suddenly you're down to 2.1%, which is still good. Cost basis is 6 cents less, 5 cents less or so. Something to consider. I'm willing to take more of a risk on it and go with at the money, pretty much, because covered calls pay just as good, if not better. The premiums are insane on this thing. So 2.54, if you sell a covered call at 250, which is another way you could possibly go, just buy the shares and then sell the covered call pretty much at the money. 12.6% in a week. Insane returns. So the stock's moving like any type of stock chart you see when you're trying to study markets. Kind of all over the place. Who knows what's going to happen in the future. If the stock stays within, I would say, a range of 1.8 or so to around 3.2. If it stays in that range and you just completely wheel it, you start the position on Monday, you let it do what it's going to do, and then Friday, you either sell another one or you go the other direction. And I mean that both ways. So if you, like I currently don't have the shares, I almost did. If I had the shares right now, 1,100 of them, I'll just sell 11 calls and then get a lot of money there. So if the stock, again, stays between 1.8 to 3 or so, I think you can make a lot of money with it. Just completely wheeling it. Don't roll it. Rolling is probably not worth it because you have to do a lot of positions to make it worth it. And transaction costs could add up a lot. So just take the full theta decay. Be willing to get a sign. Be willing to wheel it. Something to consider. I did another one for 2. Actually, like the premium so much. So that's why I put 4 contracts at 0.14. I don't know if that'll hit or not. Let's see what happens on that. I made it a little later, 416. So a little bit further out. 416, 19 days out. I'm going to go down to 2. It's paying 14. 7% return in 3 weeks. Good returns, right? As long as the stock doesn't completely tank, you'll be okay. If the stock goes up a lot, you might not necessarily lose out, but you won't get the full returns because then you have to spend more to do it. Rocket Mortgage is another one. I have $21.89 for Rocket. Premiums are good on this. A lot of people are trading it. We're $23.91. I'm looking at the $21.89, and I'm still trying to get my head around how ridiculous these prices are. $21.89. Refresh will like me eventually. Or not. Alright, if I'm back, sorry about that. For Rocket, again, they do show profits. I don't mind holding it. If I ever do get a sign, I might just sell pretty far out of the money covered calls. But it's still paying 1%. You could even do $21.39. It still pays 1% in a week. The deltas are reasonable. So stuff to consider. The last one's SNDL. I'm doing this based on the challenge that I did before. Essentially, whenever I took the profits from earlier in the year, and I'm only playing with the profits at this point, not extra money. So I'm at 1.5 call, 5 contracts. Stock tanked a lot last week. It paid really well the week before. Made about, I think I made $10 per position, so $50. But it's down to 1.3 instead of 1.42 or so. However, this week it's not going to pay as much because we're at 1.13. And we're looking at just $5. And I got to go 2 weeks out. Hopefully I could get one for 401 at 5. But it had no bid price. This will most likely hit. And then if it goes back up to 1.5, 5 contracts, $25. So I'll take it if I could. All right, I'm going to try to get my video on. Maybe you can see me in here. You might see a lot of weird stuff going on. Okay. This? It's like Windows to death. It's probably not going to show me because it doesn't want to see my face. But, oh well. I'm going to delete. Let me try something real quick. Whoop. Oh, there I am. Ah! Okay. Well, that's all I got for this live show. If anyone has any questions, let me know in the stream. If not, you could show on the chat. Do see a few people still there, so definitely appreciate you guys that were watching, and let others know about this. If you think this would be a good regular series to do live, I don't mind doing it now. And this is fun for me. I don't have to do a lot of the editing that I normally do in my videos. Just jumped on rewatch. All right, thanks, Matt. Yep, it should show a recording of the whole thing. This was more of a just see how things go and testing it out. Matt, do you have any particular positions you're thinking of we could do quick research on? I showed a few like RKT, GNUS. And if anyone else that's watching wants to let me know quick positions, I'll take a look now. All right, thanks, Thomas. Yeah, I like this too. I think it's fun, especially when you get some people asking things too, but I don't mind talking to you guys. PLTR puts. Yeah, let me go over PLTR. What strike do you have? I might have to change my window so you could see my screen. Let's do window. You know, cash secured puts on it. Hey, Hassan Investing. You're one of the OGs. You've been here forever. Thanks for joining in. PLTR 2258. And we're looking at, if you don't own PLTR yet, I would probably go, if you want to go weeklies, maybe a 20. 23 and 24. Okay. Yeah, it might go back up. Who knows? 23, 24 don't seem too bad. Delta's 0.27. I don't necessarily trust it. It could shoot back up. And don't worry about rolling. Try not to get a sign. Yeah, I agree on that. You might just want to keep rolling. Yes, Hassan. Nice to see you. Oh, where am I teaching? I'm in Texas, San Antonio. Are you New York again? I thought you said you're New York, right? Or you teach somewhere, I remember. It was like 2 years ago, right? For PLTR, yeah, roll. You might have to roll a month or so. 500 shares, happy no more. Rather buy shares than get a sign. Yep, I agree with that. Hopefully there'll be another big uptick. Kathy Wood's been buying. Like, it's a fire sale, apparently. I saw some articles on PLTR that the executives, one of the main people that founded the company, sold a bunch of his shares. It was like 90-something%, which is not a good look, but I'm very long-term bullish in PLTR as well. I have 400 shares. New York City, Hassan, great. I grew up in New York. Manhattan, Brooklyn, Bronx. And what do you teach too? I don't think you ever told me. I teach high school science. Jan, let's look at WPM. I don't know much about them. Stock would help. Words per minute company. Oh, the metals. Okay. Let's look at the puts on it. I don't know much about the precious. Jan, you looking at monthlies, weeklies? What are you considering on it? I'll look at both, but 3808. You're not going to get a ton off them, but could be relatively stable. You're on 36 pays 0.25% a week. Not the end of the world. You might want to go out to a month on it. So let's look at 30th of April. $38.08. If we're looking at around 35, 36 maybe. If you want to be safe about it, 2% in a month is not bad. I don't know if they pay a dividend or not. I don't know. They might. I'm not sure if they do. High school science is on. I took all those Regents tests when I was growing up. The biochem and physics, the chemistry Regents I took when I was 101 fever back in the late 90s. Decided to still take it because I was taking it in the summer, and I still got like a 96 on it. And then I'm looking back, some of these new Regents tests are pretty tough, at least compared to Texas. Oh yeah, WPM does pay a dividend. So that's something to consider to keep. A few other of the precious metals might be SLVO pays a dividend on its own. They sell covered calls on silver. And last month was really big. 19 cents a share, but the share price was about $6.20. So 19 over 3% dividend in a month. It's not going to always do that, but the last few months the dividends were 2 to 3% a month, which is really good. Hassan, do you know anything about option trading? Or do you do mostly just buy shares, buy ETFs? I pretty much pivoted this channel to mostly option selling, but I'm just wondering if you know about it. Have you done it before? If anyone else that's watching have any other quick questions, I'll stick around. Yeah, small dividend on the metal one, right? I personally don't invest much in metals. I know some people that will do large positions in gold, but buy more under 37. Okay. All right, it's on Snbl, Graphite Mining. Let's check it out. I haven't heard of that one. It's a cheap one. You could buy a lot of shares. It's been shooting up, yeah. From 28 to $1.16. We're looking at a 290% gain this year. I guess you could do okay on that. Oh, interesting pick. All right, Matt, there's a lot there. Only stocks. Hey, nothing wrong with that. If you're ever interested in learning more about option selling, let me know. But yeah, stocks are fine too. I currently have about 40% in just ETFs. Yep, like to be an owner. Yep, nothing wrong with that. I do a few different strategies. One is to buy dividend growth companies like AT&T. See, Matt says PFE. I own PFE for about 6 months. And then sell covered calls pretty far out of the money. So you get a slight boost to the dividend, which I don't mind doing. Yeah, thanks, Hassan. I wonder, why do you think graphite will continue to be very important for manufacturing and whatnot? Let's just look at the price of it. Production soon. Very good. Yeah, different mining. Oh, using lithium ion batteries. There we go. Using that high school science to make money in the stocks. Love it. It's like invest in what you know, right? Oh, Matt, you do SLV, right? That's a silver, right? Silver ETF. So you have some pretty high IVs, some lower IVs. Nothing wrong with that. It's good to diversify. And it looks like a lot of your holdings are in different sectors. That's something I didn't really talk about here, but I try to look for one, maybe two positions in different sectors. Like I did SOS and Riot, which were both very similar. And I'm not necessarily agreeing with what I did there. So if anyone else has any other comments, I'll stick around another 15 minutes if you'd like. Definitely been fun here. Yep, electric vehicles. Hassan, look at, you probably know of them already, CCIV. They were a SPAC from Lucid. They're going to do very high-end luxury electric vehicles, trying to compete with Tesla. And it looks like a lot of their cars are going to come out soon. I currently own, I don't own it yet, but I have 200 shares that I might get owned on it. NIO is another one from China. These are all very high IV positions. So we like selling cash secured puts where you get a large premium for possibly buying it at a cheaper price. And you're a geologist, really cool. Yep, I'm currently teaching chemistry and also IPC. It's like the intro to chem. The kids that aren't quite ready yet. Earth science, cool. I never took the earth science in New York. They made me, as a nerd, take bio in 8th grade and then took chem in 9th, physics 10th, and then I got the APs going, AP bio 11th, AP physics 12th. I was up in New Rochelle. You might know where that is. It's about 40 minutes north of you. They had other people take earth science first in 9th grade, and then they took bio and whatnot. But they let me, being my big nerd, take bio in 8th grade. I don't know if they do that much in New York anymore. They don't do that in Texas. We got to wait till 9th grade for bio. So yeah, some of the IV, CCIV, NIO, obviously Tesla. There's a Fisher one. They were a SPAC too. I forgot the name of the company. Solar Roof. Thermo Fish. I think that's different. I forgot which one it was. But they were a SPAC. There was a recent electric vehicle SPAC from England that got hurt pretty bad. But yeah, the electric vehicles are definitely paying a lot in the premiums because the stocks could go all over the place. All right, if there's no other questions, I'm going to close it down. I'll give you guys another minute. Again, thanks everybody for watching. If you think this would be a good regular series to do live, I definitely had a lot of fun doing it live. Had more fun here than I did editing videos for a while sometimes. Essentially just show what I'm thinking, make it a lot more personalized for you guys. So, do they have earth science in Texas? Yeah, they do, but most people don't take it. They usually leave that as like a 12th grade. They didn't pass their quote-unquote regents that we have here. It's called the STAR test. Are you trying to stick to higher quality stocks on CSP trades now that growth stocks are more volatile? Up to a point, Matt. My goal is to get 2% a month. And if I could get 2% a month, I usually aim for 4% a month and then be willing to manage them, you know, roll it, go CC side. So if they're more higher quality stocks that I could get close to that, I would definitely consider that. But most of the other positions I have, like O, Store, T, PFE, they don't quite pay the 4% a month. I was looking at the ETFs too, like SLE, SLF, and it's hard to squeeze out 2% a month on those unless you're pretty much in the money. It's definitely something to consider, though. Let's look at PFE real quick. I don't know if I can squeeze out 2% a month on it. Might be a little hard. 36.25. Probably go a month. 36. We're looking at in the money. Doesn't even pay the 4. And that plus dividends, sure. Yeah, thanks for watching, Matt. All right, guys. Yeah, I'm going to shut it down now, but thanks again, everyone, for watching. I'll make sure that this is a recording so you can watch it later, and I will be checking in again. We'll definitely do more of these live, especially if you guys like it. So thanks again for watching, and I'll talk to you guys next time. Have a good one.